Good morning, everybody, and thanks for joining me on the Capitalist Cast. Today I am joined by Carl Marrara from the Pennsylvania Manufacturers Association. Carl, can you explain quickly what the PMA does?
Sure. Thanks so much for having me, Leo. I'm the Vice President of Government Affairs for the Pennsylvania Manufacturers Association. We're the statewide organization that represents all of the different people and all the different companies that make all of the different things throughout the Commonwealth. So, I mean, everything from your household Fortune 500 names to some of the local foundries and machine shops. It's all under our umbrella, all across the entire Commonwealth, and it's, I mean, just a massive industry. It's over $90 billion in gross state product every year. It's more than 500,000 people on the plant floors themselves, but it's also millions of additional jobs that are sustained supporting those manufacturers on the plant floor. And we try to speak on behalf of the totality, the whole industry, and speak for the business competitiveness of Pennsylvania.
Yeah, and really there are very few things that impact competitiveness like a state budget. And last week we saw Governor Wolf come out with his annual state budget proposal. None of this stuff is in law yet or anything. It's essentially, it's almost like a State of the Union, but for budgets, right?
Yes. The state of the state, as some refer to it in other states. And it wasn't a surprising address, and it is very much a starting point, but it's a starting point that really was dead on arrival. The governor proposed an over $40 billion spending increase. And, there's some things that the state is obligated to pay for. There's the actual state budget is much larger than that 40 billion or 40.2 that he was proposing. But it is a starting point. Unfortunately, it was a starting point that isn't actually a starting point. The legislature is the one that actually creates the spending plan and ultimately approves it. But we're not really in a close ballpark between what the legislature thinks is appropriate and what the governor is proposing. We can get into a lot of the details of it. There are a lot of bad ideas in what the governor proposed, but go ahead.
No, I think that's a good idea. Let's talk a little bit about some of the bad ideas that are in there, because I mean it's one of those things where it's a target-rich environment for bad ideas in terms of what he proposed.
Yeah, let's start on the business tax front, and I'm going to include the increase in the personal income tax in that, because I think that's wholly appropriate, considering that over 80% of Pennsylvania businesses actually pay that personal income tax rate as their business tax rate. So if you're a sole proprietor, if you're an LLC, basically all the S corps, you're paying that 3.07%. What's interesting, and the governor actually even said this in his budget address, is that Pennsylvania has one of the lower personal income tax rates. Now, there are a number of states that don't have any personal income tax rate, but including ones that we're directly competing with, especially on the natural gas manufacturing front, like states like Texas, no personal income tax rate. But the thing with the 3.07% personal income tax rate that we do have is it is fairly competitive, especially amongst the Northeast states. And the governor's, essentially said, here's this one area where we have a distinct competitive advantage over our competitor states in the Northeast. And you know what? We shouldn't have that. We should raise that. He in the budget address, he pretty much said that, which was shocking. So the governor is proposing to raise that up to about 4.5%, and that's ultimately like a 46.7% increase, which is completely asinine. And there's so many issues baked into this cake. So I'm going to try to dissect it in a really digestible way. So increasing it to basically a 4.5%. The problem is that then he's talking about that this is actually going to be a tax cut for those earning, like family of four earning $85,000 a year and less. That's actually kind of impossible to do under the uniformity clause that Pennsylvania has in the Constitution. Again, this is one of the very good things, one of the only good things about Pennsylvania's current tax policy is that we have this uniformity clause.
It's a flat tax rate regardless of what you're earning.
Correct. Many other states don't have this. And that's why you see a number of other, especially progressive states, instituting these different tiers and different brackets in their tax system. And that creates a lot of complexity. It creates a lot of inequity. And one of the strong points of Pennsylvania's tax policy is that we have this uniformity clause. Well, his way to get around that uniformity clause and supposedly say that people making less than, family of four with a household income of $85,000 a year, whatever his magic number is that he's going to shift what constitutes a poverty rate. And anybody that's earning under that is now considered to be impoverished as far as the state is concerned and will actually get tax rebates. I don't think that stands up constitutionally because it's surely going to be challenged in the courts. And that poverty rate being so different than any kind of federal standards, than any of the other state tests, I just do not see that standing up in court. And then what you're going to end up with is everybody paying, a 4.5%, which is going to be the largest tax increase that Pennsylvania has ever seen by far. That's I think the main reason that the legislature is not even going to consider this proposal, and rightfully so. So again, but one of the things to keep in mind is that these small business, 80% of Pennsylvania small businesses are paying this rate.
Right.
Many of those businesses that are paying this rate are the same ones that the governor has shut down throughout the pandemic. And the shutdowns in Pennsylvania for Pennsylvania businesses, it's been broader, it's been deeper, and it's been longer than almost any other state. And because of that, our economic recovery coming from those very broad, deep, lengthy cuts or halts in the business community and the disruptions that's caused throughout the business community, especially in the manufacturing sector, because you have to think about all of the suppliers, all the raw materials, all of those trucking shipments that got just completely turned on its head throughout the pandemic. We're going to have a hard time coming out of that. And a lot of those companies are the ones that are currently paying that 3.09 PIT. And of course, we're not getting the revenue that he's expecting out of it. So what's his solution? To tax more? That's not going to lead to positive economic recovery for the Commonwealth. That's for sure.
No. I mean, it's just a ridiculous point to start at. It's well, we're not bringing in enough tax revenue, so we need to raise taxes. Well, you're not bringing enough tax revenue because you shut down the economy. This is what happens when you shut places down; they can't pay you.
Right, and one of the issues is that, and we heard this back in March, that the governor said that there's no playbook. There's no playbook. This is unprecedented. There's no playbook. There actually was a playbook. The Cybersecurity and Infrastructure Security Agency under the Department of Homeland Security has a playbook for if an emergency like this happens, what industries are absolutely essential in maintaining the security of the nation. It's not just security in the physical sense that we often think of it, but it's also in the logistics and the supply chains, the way that we have to keep our industries afloat. And the governor just completely disregarded that and decided to go it alone without any kind of consultation from the business community or the federal government at the time, which was the Trump administration, and just decided to go its own. And that's why those cuts, or not the cuts, but the shutdown orders were much broader, deeper, and lengthier than our competitors, or than almost any other states, because many of them did follow those guidelines.
Yeah, and I guess while we're on the subject of sticking it to businesses and causing more problems that are necessary, let's talk about his other proposal to increase the minimum wage.
Yeah, so I mean, this is one of those issues that's been around for, government mandated wages have been a topic of debate for, decades. And his proposal, I think, again, puts us at a unique competitive disadvantage. The market will, I don't really know of many individuals who are trying to sustain a family on a minimum wage. That said, what the minimum wage does is it acts as an entry point into the economy. And that minimum wage, and especially in the manufacturing sector, we're often not the best ones to talk about this issue because,
right.
I mean, the manufacturing sector has some of the best wages that one could possibly have. I mean, just tremendous number of family sustaining jobs. But here's one of the issues, Leo, is that even though manufacturing has some of the best wages across any sector of our economy, at any one time, there are at least 6,000 open manufacturing jobs throughout the Commonwealth. And the reason is that because employers can't find not even people who are trained to do the job, but people who are trainable. And what study after study has found is one of the reasons that we can't find those trainable individuals is because the access into the workforce is becoming more and more delayed. Well, why is it becoming more and more delayed? The reason is because of government intervention in those minimum wages, and also government interventions as far as regulations, as far as benefits and things like that. Because those high school students who want to work at the Tasty Freeze down the street and learn how to show up on time, learn how to interact with customers, how to answer a phone and take orders, how to provide customer service, are those ones that are going to get that training to enter into the workforce in higher levels later on. But the more and more we delay that process, the harder and harder it is to find those folks that are trainable. So while the minimum wage to the manufacturing sector isn't necessarily as much of a cause for concern as far as the number, the issue is that very first access point into the workforce is going to be further delayed, and that is the very last thing employers in Pennsylvania need.
Yeah, it's people don't necessarily understand the connection between the cost of labor as an input and what you can charge essentially as an output. Mm-hmm. You're talking about the entry level jobs, people, the high school kids who are working at grocery stores, who are working at the Tasty Freeze, who are working at, local mom and pop businesses. They're not just doing that for the minimum wage. The minimum wage, like you said, is really an opportunity for them to learn the types of skills that other employers are looking for.
And those employers do rely on those folks, and they know that they're getting individuals who have never entered the workforce before.
Right.
When those high school students are working at the Tasty Freeze or the hoagie shop or whatever in small rural Pennsylvania, that they know that's what they're getting, but that's okay, because that's what they need. And a lot of those businesses that are training our next workforce are the ones, again, that the governor shut down, and then he's going to force them to pay double wages. It's again just kind of a counterproductive policy for sure.
Yeah, it is. For a whole variety of reasons. Other than the minimum wage and the income tax, the income tax issues in the budget presentation, what else caught your attention as you were going into it?
So one of the positive things is that we're talking also about our corporate net income tax rate, which is currently at 9.99%. It's the second highest flat rate in the nation. Thanks, New Jersey, for taking over taking the crown off of our head for that one. That they actually passed a tax increase about a year and a half, 2 years ago, and they're upwards of like 12% now. But at 9.99%, we're either the second or the third highest flat tax. And the governor is proposing actually decreasing that step by step down to, I think it was 6.99 was his most recent proposal, but that's kind of been all over the place. The problem is that he's coupling the reduction of the corporate net income tax rate with something called mandatory unitary combined reporting. And if we ever want to see if we ever want to see eyes glaze over on the Monday after the Super Bowl, we should talk about tax complexity created by mandatory unitary combined reporting. Say that one 5 times fast. I'm going to put it in its simplest terms. mandatory unitary combined reporting essentially makes businesses that operate in Pennsylvania have to accommodate for all of the business activity outside of our Commonwealth. So it grossly expands the capacities of the Pennsylvania Department of Revenue. And to be quite honest with you, I just don't trust them. This is the same Department of Revenue under the Wolf administration that completely changed the way, and we were the only state that did this, how the valuation of business assets was handled. And that spurred from the Tax Cuts and Jobs Act. And then they made this new rule. The legislature had to create legislation to fix it, and then the governor held a ceremonial bill signing fixing the problem that he had solely created through the Department of Revenue. But regardless of whose Department of Revenue this is, mandatory unitary combined reporting is a bad idea because it grossly expands the ability for the Pennsylvania Department of Revenue to seek business transactions in other states and say that's revenue that belongs to the Pennsylvania taxpayers. But beyond that, it adds just a ton of tax complexity. So Pennsylvania already has what are called add-back provisions. And the Council on State Taxation, a great organization in Washington, D.C., very nonpartisan in nature, the Council on State Taxation has found that states that already have add-back provisions see no increased tax windfall if they institute mandatory unitary combined reporting. What they do see, what businesses do see, is just a giant added cost of tax attorneys and CPAs that have to do yeoman's work to comply with the new complexity that the state now has. So really bad job creator for the economy as a whole, a relatively decent job creator for tax attorneys, but that's about it.
Yeah. And what's interesting, we hear a lot from the governor and from, other folks who are on the left-hand side of the political spectrum, how, these big multinational corporations are the problem and these giant businesses are the problem and we need to support local industry and, fill in the blank. But what the disconnect is really that the policies, or most people don't realize, is that the policies that they're talking about, an increased minimum wage, more complex tax compliance, changing the tax code, those are all things that benefit the largest corporations, because the largest corporations are really the ones that have the ability to absorb that increased cost and pass it on in smaller chunks to a much wider audience.
Well, think of it this way. A lot of times those small businesses, especially the ones that service manufacturers, those manufacturers that are set up as LLCs and S-corps, are actually the ones that are providing a lot of component parts, a lot of services to the larger manufacturers. Take Boeing, right, for example. Boeing down in Chester County, right along the Delaware River. They have suppliers, manufacturers in almost every single county in the Commonwealth that are making different component parts to make the Chinook helicopters and the fuselage for the V-22 Osprey down there. The multiplier effect is so great. So, by right sizing our corporate tax, and here's the thing, yes, our corporate tax rate is 9.99. But almost any corporation will tell you they're not actually paying the 9.99, that there are provisions in Pennsylvania's tax code. And if they are paying 9.99, they should probably seek different tax counsel. But the problem is that when we're trying to cite new manufacturers, when the national or really multinational or international manufacturers are looking for a location, they're going to look at Pennsylvania's one pager and see corporate net income tax 9.99. It's an automatic red flag. They'll look at that and it's a no-go. They won't look to the next step and see what assets we do have here, that we have an incredible workforce, that we have vast amounts of natural resources, that our access to market is unprecedented. All they're going to see is 9.99% and say next. And that's why it's so important that we actually reduce the corporate net income tax rate to be more reflective of the tax rate that is actually happening in Pennsylvania. But trust me when I tell you this, that mandatory unitary combined reporting is not the way to do it. Because one, there's not going to be the windfall that the governor thinks is there. And then what's going to happen? Well, we're just not going to roll back the corporate net income tax rate. We're going to delay phasing that corporate net income tax rate out, just like we saw with the capital stock and franchise tax in years gone by. And we're going to be left with tax complexity with mandatory unitary combined reporting, and we're still going to have a 9.99 CNI. I mean, it's very clear that that's what's going to happen. We need to decouple these two issues. It is really apples and squares. They are totally different tax procedures, different processes. They should not be talked about in the same sentence, and I'm guilty myself of talking about them together. But we need to stop that because they are totally different tax policies, and we should not do one good thing in exchange for something that's really terrible.
Yeah, no, I agree completely. So what else? I mean, there was just a whole panacea of bad ideas in there. I know that the governor also, in addition to increasing the minimum wage and everything else, he also brought up as an idea for generating tax revenue, the legalization of recreational marijuana. Mm-hmm. Let's not necessarily look at that issue in and of itself, but what would be the practical implication for businesses if that were to happen? Like, what does something like that do for an employer, and why does it?
Let me approach it from the manufacturer's standpoint. Manufacturing, while it is not the manufacturing of old, while it is just, I mean, the technological advancements are amazing. The work that is being done on shop floors is just unbelievable to see. I mean, one of the coolest parts of my job is being able to go into some of these locations and see how they're taking these raw materials and making these finished goods, and it's incredible. There are still bladed instruments. There are still very serious chemical reactions. There are things like, lasers and I mean, think of the advancements in 3D printing. There's large, heavy machinery, and a sober workforce is of the utmost important. I mean, the only acceptable number of workplace injuries is 0. And the legalization of recreational marijuana creates a whole lot of uncertainty for manufacturing employers. And you have to think of it this way. Manufacturers are still going to have to comply with all of the OSHA regulations.
Right.
They're still going to have to comply with all of the different state mandates and federal mandates in order to be insured. And I mean, God forbid something does happen on a plant floor. I mean, after the scene has been, secured and immediate medical attention has been sought, the very first thing that happens is that individual is drug tested. And if that individual tests positive for an inhibiting substance, that business is I mean, the very next question is, what did you do about it? And that's why drug tests are so important. Go to wolfhomeproducts.com. It's the former, or it's the governor's former business. It's a drug-free workplace. So as much as he's talking about, the legalization of recreational marijuana, I mean, while he was the president of Wolf Home Products, it was a drug-free environment. It still is. And in the manufacturing sector, it needs to be. And Leo, it ultimately comes back to some of the other things we were talking about, and that's a prepared workforce. And if manufacturers already have at any one time 6,000 open manufacturing positions throughout the Commonwealth, almost every manufacturing job is going to require a drug screening. And we actually sought to quantify this back. If you remember, this was kind of a controversial statement that Governor Corbett at the time made, where he said that one of the reasons that the unemployment is high is because people can't pass a drug test.
Right, I remember.
Well, we wanted to quantify that, so we actually commissioned a public poll. We found that 1 in 3 new hires in just the manufacturing sector are impacted by the drug screening. Not necessarily because they fail the test, but because you go through the interview process, and on a Thursday, you're told, okay, today's Thursday, come back tomorrow. You're hired. You're going to start Monday, but come back tomorrow. We're going to do your drug screening. You'll get your uniform, and then we'll see you Monday morning. They just don't come back because they know they're not going to pass it. So that's ultimately one of the main issues that manufacturing employers face, and why, if the governor's looking for revenue, sin taxes aren't necessarily the best place to look. Growing the greater economy is, and that's not a policy that will help ultimately grow the economy of the Commonwealth in the long term.
Yeah, it certainly has far-reaching impacts beyond the revenue. As you mentioned, the ability to get insurance, the ability to comply with OSHA and other federal regulations. This isn't just an issue of manufacturers or people looking at it and saying marijuana is bad. This is an issue of them looking at it and saying our insurance company won't cover us if we have people doing X.
This is to your point, it's a highly complex issue that is not just as easy as saying, let's legalize it, tax it, and bring in more revenue for the Commonwealth. It is highly, highly complex, and something that should not be entered into lightly. That's for sure.
Yeah, absolutely. So I think we've covered a lot of the governor's budget proposals. We mentioned kind of in passing as we were going through the impacts of the governor's shutting down the economy as it related to the income taxes, the fact that the $15 increase to a $15 minimum wage would have on businesses that are some of them just getting able to reopen. One of the other things I wanted to touch on quickly is there's going to be a couple of constitutional amendments on the ballot related to the governor's ability to declare disaster emergencies. Does PMA have a position on those?
Yeah, and I know we're running short on time, so I have one quick thing that I do need to get in, and that is the new additional tax on energy production that was a part of the budget.
That's right. Right, thank you.
So I will touch on the constitutional amendment, and that is important, but this is almost more important. So the governor is proposing a new additional tax on energy production. I refuse to call it a severance tax because we really already have one of those through the impact fee. There are actually states that have the severance tax or a traditional severance tax that want to move to an impact fee because the volatility of natural gas prices, especially during the downturn of the pandemic, led to massive holes in their budgets. States like North Dakota and Ohio that really rely on that traditional severance tax, that those funds just weren't there. And that's the same issue that we'll run into in Pennsylvania, but even more than that. Ultimately, a new additional tax on energy production in Pennsylvania gets pushed on to the consumers. And you know what? You turning on your stove, me turning on my stove, yeah, we are end consumers, but the end consumers that I'm talking about are people who are firing ovens to create glass that are firing at multiple 1,000 degrees, 24 hours a day, 7 days a week, 365 days a year, where their natural gas tax bills are upwards of $1 million a month. Add another 6% to that, 7%, 8%. And you're making us, again, uniquely uncompetitive. Energy stability, energy availability, energy affordability are things that Pennsylvania has going for it. We don't have the robust transportation infrastructure transmission. We need more pipeline infrastructure. States like Texas and Louisiana are eating our lunch when it comes to infrastructure development. And I mean, we can't even get a pipeline that runs from northeast Pennsylvania into New Jersey because the Biden administration is currently throwing and the state of New Jersey is throwing a wrench in that. So, a new tax on energy production in Pennsylvania is the very antithesis of the economic policy. We have a God-given asset here that is going to completely revitalize industry, and the multiplier effect is huge. For every dollar that is invested in manufacturing facilities that rely on natural gas production, you get another $2.74 spit back out into the greater economy. The multiplier effect is absolutely generationally revolutionary. And that's putting a new additional tax that's going to thwart that investment is just a very, very bad idea. And on the constitutional amendments, the limiting of the governor's power and emergency declarations is absolutely necessary, and it's been proven that Pennsylvania uniquely has. We're different than other states. It seems as though other states are involving their legislature more, whether that's because of their constitution or not, I don't know. But things aren't good in Pennsylvania right now as far as unchecked powers of the governor. And I don't care if it's Governor Wolf. I don't care if it's, let's say the next governor is a Republican, which if Governor Wolf continues to propose policies like these, it very well could be. But it doesn't matter who the governor is. At a certain point, the people, Pennsylvania's General Assembly, who the people are closest to, need to have a say in how we move forward in government response to a situation like we're currently in. And I think that the constitutional amendment that's being proposed allows for the flexibility for the governor to respond to, a singular actual like natural disaster or an act of war, while still allowing the General Assembly some input if we're going to see something like we're seeing right now, where it's going to be, months, if not years, before some kind of emergency situation is rectified.
Yeah. Well, I really appreciate you coming on. So for anybody who tuned in late, I'm going to give a quick rundown of everything bad in the governor's budget address.
You might be here for another hour.
Yeah. Well, so we had a increased minimum wage. So these are all things that are going to make it harder, not only for Pennsylvanians to find a job, but also more difficult for Pennsylvania businesses to be successful. So we have higher minimum wage. We have increased personal income tax rate, making the tax code more complex, increasing energy costs. Am I missing anything? Like, this has to be one of the worst budget addresses I can think of in recent years.
I have to say, I think we covered it. But again, as I said at the very beginning of this, this was a proposal that was dead on arrival before he even. We had a different address this year in that it wasn't before the General Assembly. It was recorded again because of safety measures with the pandemic, but. He kind of gave a preview to some of the issues that he was going to tackle in the budget the Thursday prior to the Tuesday that he released the budget address. And we could tell from the very beginning that this was going to be a non-starter. But the good news is that, for the millions and millions of dollars that Governor Wolf's PAC and Lieutenant Governor Fetterman's PAC poured into the General Assembly to try to flip the House and the Senate this year, I mean, not only did it not happen, but the Republicans came back with even stronger majorities in both chambers. So, I mean, the voters have spoken. The proposals like this are dead on arrival, and the General Assembly is going to, I think, propose a very sensible budget that reflects where we currently are amidst trying to recover from a pandemic and from government shutdowns that were deeper, lengthier, and more strict than other states. And I do have confidence in the General Assembly's ability to do that, and I think that's what we're going to see.
Yeah, I think you're right. I think the worst case scenario that we're going to run into is a protracted, budget issue where we have the governor vetoing or threatening to veto the budget, and that would not be helpful for Pennsylvania either, but it would be a less bad option than the type of budget that he proposed.
But we'll certainly be following it closely, that's for sure.
Yeah, as will Cap. And again, Carl Marrara from the Pennsylvania Manufacturers Association, I want to thank you very much for taking time out of your morning today to come on and talk to us. And we will definitely have you on again as the budget process moves forward. So thanks.
I have to put in a plug for your viewers that are watching now. This Sunday on PCN will be the first episode of the new season of PMA Perspective. So it's PCN Sunday, 8:30 a.m. And we're going to have Representative Frank Ryan and Senator Kristen Phillips Hill do a very similar analysis of what we just did here, but they're much better than me. So they'll give us the inside scoop from the legislators' perspective of what's happening But again, that's this coming Sunday at 8:30 on PCN.
Thank you very much, and I will make sure that when that episode comes out, if we can get that put up on our Facebook page, because I'm sure that'll be an interesting conversation for folks to be able to take a look at. Thank you, Carl. You enjoy the rest of your day. Thanks everybody for tuning in. Sorry we went a little over today, but it was one of those things where there was just no avoiding it. So thanks, Carl.
See ya.